Okay, guys, this will be the last test. Are we live? Are we working? Can you hear me? Please let me know. YouTube is extra bugging this morning, so let me know if you can hear me. Let's see here. Okay, awesome. There we go. Thank you, Dylan. I appreciate it. Finally, we're in business. Yes, yeah, that's how I feel right now, baby. You know, at this point, I was gonna give it one more try, and then I was gonna be like, "Hey, listen, screw it. I'm over it." Because at this point, we don't even really need this session. It's kind of a formality to get us into that gear. But we'll dive right into the Facebook group with those Loom videos if YouTube wants to dim my shine. But one thing I don't want to do is hop over to Instagram after wasting a few minutes on YouTube and then suddenly it makes us late to get into our pre-market analysis. So I'm glad that this worked. Again, guys, I apologize, but I also can't control any of what YouTube does on their end. So they just kind of got to get their ish together. But we are here now, so I'm going to go ahead and make sure that we utilize the time and dive directly into the news that we have today. We had a fantastic day yesterday. I mean, absolutely home run day. Thousands of dollars made. Beautiful day, right? Rent paid, electric paid, mortgage paid. You want to buy a new house paid, vacation paid. Those are the types of days that you love to see. But again, you don't want those types of days to skew your expectations of markets. Every day is a new day. The market owes us nothing. So even though we hit on Meta, SPY, Tesla, Microsoft, Google, double time, right? Hit multiple over 100% plays on Google. Even doing all of that, the market owes us nothing today. Clean slate. We come in, we take advantage of the opportunities available to us, but you do not try to force anything. You wait for the days that provide you with opportunity to come to you. You can't force the market to do something you want it to do. So just make sure you carry that into the day, right? Whatever happens, if you have a really horrible day, temper expectations. Not every day in the market is like that. If you have a really awesome day, temper expectations. Not every day in the market is like that, right? So I'm not going to be the type that's going to be like, oh, yeah, the market crushed it today, and, every day it's going to be like this. Every day we're going to fly this high. No, right? Whether it's a really high or really low, you have to temper both of those back out, right, in order to kind of maintain an unbiased opinion. Because as soon as you get biased, as soon as the market kicks you in the chest, right? Throw a 2 in the chat if you understand what I'm saying. Now, our top news, low bar. So banks will kick off the Q2 earnings season today, leading off with JP Morgan Chase, whose ticker is JPM, Citigroup, whose ticker is C as in cat, and then Wells Fargo, whose ticker is WFC. For the most part, analyst earnings revisions don't paint a pretty picture. Only one of the big 6 U.S. banks saw its Q1 earnings consensus estimate rise over the past 6 months. Analysts have cut their Q2 earnings estimates the most for Goldman Sachs. Ticker GS, which is expected to post its worst quarterly earnings in years, and Morgan Stanley. So banks leading off the charge here when it comes to earnings season. They always do. I don't know if Morgan Stanley beat, but they're definitely up here. Pre-market testing that 87.66 area. So that's an important area because that is daily double bottom breakout for Morgan Stanley. So if Morgan Stanley can close above that area by end of day, looking very good to swing Morgan Stanley calls dated next week and the week after that. It looks like they actually have earnings next week. So whatever banks did report, probably did have a good report. So let's see here. JPM. So JP Morgan reported. Let's check out JPM. Morgan Stanley is up like that. It might be because JPM had a positive report. Yeah, it looks like JPM is up, but not up huge. They got the earnings and we kind of went up from 150.5 to 154.5. So now we're kind of basing around 152.50. So not a big move. I'm going to have to look and see exactly what happened there with their earnings. Citigroup up, but up very slightly, basically nothing. Let's check out Wells Fargo, WFC. Wells Fargo, they're up pretty significantly. Nothing huge, but again, up from like 43.60 to like 45.20. So banks, something to keep an eye on. This looks like one of those things, though, where we can pop and then sell. So just, keep them on your radar. And also look at the earnings reports. I'm not going to go through and break down the earnings reports. I'm just letting you know 87.66 is an area to watch there for Morgan Stanley. And then same thing for Goldman Sachs. I think their area, what was that, 329.40 is their area? Yeah, 329.40. So they've been kind of hovering around that area. They haven't gotten the close over. Today they didn't get the close over. So watch Goldman Sachs at 329.40 area. Goldman Sachs is already over that right now. So, just keep a lookout for banks. 329.40 on Goldman Sachs, and then on Morgan Stanley, 87.66, which is hovering right over right now. Those are two banks to keep an eye on. Now, rate repercussions, and again, go through and see what happened with the earnings on these other banks. Like, don't just say, oh, these things are testing, because if, the other banks didn't really get great news, this pop might be short-lived, and it might end up being a big sell-off, right? One might even say it could end up being a waterfall. If this actually looks like a waterfall. Kind of. I guess we'll give it to them. Now, rate repercussions. Part of the reason for the lower expectations for bank earnings is the deposit costs are continuing to rise as the Federal Reserve's interest rate hiking path continues, albeit at a slower pace. Jefferies' Ken Usdin expects deposit mix shifts and elevated competition to weigh on funding costs, while reserves for bad credit will likely increase. Quote, expect Q2 to be similar to Q1 with deposit betas and non-interest-bearing deposit outflows driving stock performance, said Morgan Stanley analyst Betsy Grasick. Credit focus. So, of course, that's just the classic rate repercussions. People say, hey, expectations are lower for banks because deposit costs increase, right, with interest rates going up. Also, not as many people, I guess, are doing deals because of how high interest rates are. So costly to borrow money. So that's kind of the classic age-old story for bank earnings during high interest rate periods. Now, credit focus, the one bright spot is credit, excluding subprime consumer. It's a double-edged sword because the good news is credit is good, but the bad news is that this could mean rates need to go even higher, which will likely put more pressure on deposit betas and non-interest-bearing outflows, said Grayson. CFRA's Kenneth Leon sees rising credit risks for personal loans and credit card balances, both quarter over quarter and year over year. In terms of Seeking Alpha commentary, Seeking Alpha analyst Logan Kane said JP Morgan looks like the best bet at this time, having likely emerged as the big winner from the spring bank panic. Juxtaposed Ideas remains bullish on Citigroup, given its well-diversified portfolio and sustained efforts in improving its operating efficiency. As for Wells Fargo, LaButte IR said its operating performance is not expected to move significantly in Q2 due to weak fundamentals and other issues. You guys know how I feel about Wells Fargo anyways, so I don't really touch them to begin with. They're kind of annoying to trade, as well as just an annoying bank in existence. But Morgan Stanley and Goldman Sachs are going to be two important ones to keep an eye on there. I've already said the levels, but for MS, Morgan Stanley, 87.66. For Goldman Sachs, 329.4. We're actually holding up around price target number one on the daily right now for Goldman Sachs. So that's 333.94. So keep an eye on those, see where we close. But if you go over the, kind of earnings results from these other banks, they end up better than expected. Then getting in here and then kind of holding through their earnings might end up being, a great move. Of course, don't enter any earnings plays where you hold through earnings if you would not be comfortable flushing that money down the toilet. I always say that. I'm going to continue to say that because earnings can go any which way. Now, crypto news, you guys already know what it's going to be about. Not a security. XRP soared over 70% after a judge ruled that the cryptocurrency isn't a security in terms of sales to the general public. However, it denied Ripple Labs' motion for summary judgment regarding institutional sales and will issue a separate order for a trial date in due course. After the ruling, Coinbase relisted XRP. The token saw its market cap swell 64% over the last day, triggering a broader rally in the crypto market with Bitcoin up 3%. In 2020, the Securities and Exchange Commission sued Ripple for allegedly raising more than $1.3 billion through an unregistered digital asset securities offering. So it was a partial win for both sides. Made a reel about this yesterday. Partial win for both sides. Where basically there was part win that went to the SEC because the judge did rule that, kind of the sales to institutions did qualify them as being a security, but the ones to the general public did not. So, obviously the biggest win would be if none of it kind of was ruled as being any type of exchange of a security. But this is still, kind of an incremental win. So, I don't think we need to talk any more about that just because we've already talked so much about it for the past 24 hours. I feel like we can probably move on. over that. You've heard me mention, I've already put out a video on that, so we can just keep it pushing here. Now, global news, more support. China's central bank has signaled that more support for the economy could be on the way, while its financial regulators are looking to woo global investors at a time when its economy has been hit by persisting weakness and geopolitical tensions. Officials at the People's Bank of China hinted at adjustments to the reserve requirement ratio and easing of property controls. In separate news, China's financial regulators invited some of the world's top investors to a rare symposium next week as they are trying to shore up foreign investor confidence. Quote, some markets are bracing for the sort of bazooka stimulus response that we have seen in the recent past, ING economists said, but we are not all sure we will see that this time. So in terms of more support, what else? China's continuing to print money for their economy. That's just where they're at. They continue. They were in a really tough spot with that whole Evergrande collapse. The real estate market fell into tatters, and they were really struggling. They're just propping up their economy by printing more money. So it ain't me. I'm not there, so I'm not really concerned. But it is something where that could be something positive for like KRE. So KRE is kind of a is it that I'm pretty sure it's KRE that is China. It's like a China ETF, right? So if China does better, this ETF does better. That can be something to look at here and checking out their chart. KRE could have a little, is it just daily, or it could have like a weekly inverse head and shoulders type setup going on here. So, if KRE can push up past that 45 level, it looks good longer term, and China looks good longer term. So this might be them, recognizing, hey, if we make this push and we inject more money into our economy, people can buy into it, and we'll see that upswing back to the upside that America is experiencing. So that's something to keep an eye on there. KRE, for those that aren't aware, an ETF basically representing China that is publicly traded here, right? So you could kind of check out KRE if you want to do anything that's China related, and they're also optionable as well. Doesn't mean that it has the best spreads, so you might play around with that, but they are optionable. So as China kind of gets into their or continuing to support their economy, prop it up, KRE is what you would keep an eye on there as we talk about translating news to market opportunity. Now, in terms of COVID news, free vaccines, the CDC has announced a program to provide free COVID-19 shots for those without insurance coverage, following an end to government-led procurements. The program, which will be launched in the fall after COVID vaccines move onto the commercial market, will end in December 2024. The move comes in the wake of Pfizer, ticker PFE, BioNTech, Moderna, and Novavax updating their COVID shots to target current circulating variants. To note, the emergency use authorization for Johnson & Johnson's COVID vaccine was revoked by the FDA at the request of the company, given no additional demand in the U.S. Yeah, I think people were over it already, but definitely over getting the Johnson & Johnson one. In terms of today's markets, mixed bag here. It looks like more green than not. In Asia, Japan were down 0.1%, Hong Kong up 0.3%, China flat, India up 0.8%. The FTSE in London up 0.2%, Paris up 0.4%, Frankfurt down 0.2%. Dow, we're up 0.4%, S&P up 0.1%, NASDAQ down 0.1%, crude oil down 0.1%, gold down 0.2%, Bitcoin up 1.9% to $31,171 hairs. That's dollars, just a play on the word dollars that we used to kind of joke about as kids. In terms of today's economic calendar, we do get consumer sentiment at 10 a.m., so that's something that could make some waves in markets. But, nothing really other than that. Ooh, there's a little wave on here. Yeah, it's not really giving me wave. It's kind of just giving me gradient. Anyways, not much that can be making waves today in markets other than consumer sentiment. So that's something to pay attention to at 10 a.m. Again, we can get some kind of 1 minute volatility. Oftentimes when this data comes out, whatever the initial move is not the lasting move. So after running a lot yesterday, I could see a world where we open up and then, we're kind of choppy or shaky, and then consumer sentiment drops and we get like a big 1 minute red candle down and maybe another one, and then we build our way back up and we actually push. I could 100% see that happening, right? just because of how markets move, market dynamics. That would fit right in line, I feel like, with the storyline of a market day, where we get a big push yesterday. Everybody's super bullish coming into today. They give us a little fake out, right? Consumer sentiment news, all this, that, the third, and then we end up pushing. Could 100% see that happening. Just like they spent yesterday, knowing we were full bullish, they spent the majority of the morning yesterday chopping on SPY. And we finished significantly higher, right? We went over 100% on our SPY call lottos. We got roughly $56 each, sold for almost 130 each. Beautiful, right? Amazing returns. We did that like 6 times yesterday. So again, absolute blockbuster day, but it takes patience. And it also takes just being just settled, right? Confident in your game plan, but not letting the market push you and bully you into taking positions that you're not supposed to take. Now, what else is happening? Microsoft, ticker MSFT, and then Activision, ATVI, mulled UK cloud gaming rights sale. Hollywood actors go on strike in historic entertainment shutdown. Shell, ticker SHEL, explores selling stake in renewable power business. Bob Iger says Disney, ticker Diz, could move away from TV networks. I heard he was trying to sell TV networks. I don't know if that includes ESPN. I know Disney owns ESPN, so we'll see. Meta Platforms, ticker META, plans launch of commercial AI model. Nikola soars after disclosing a hydrogen truck sale, and then Nokia cuts guidance as macro weigh on demand, or Nokia. Amazon rallies on record Prime Day, peers trade higher, airline stocks fly high as Delta Airlines boosts fiscal year guidance. Airline stocks, something that we mentioned a number of sessions ago, and they've taken off since then. So we went over American Airlines, right? Delta, all those a few sessions ago, they have rocketed, right? Been up the past 3 sessions, and overall the past 2 weeks have continued to push higher. So airline stocks, something that we were paying attention to, and it looks like overall AAL is looking good on the weekly, right? Got a nice weekly breakout 2 weeks ago, and hit PT number 1 of that weekly breakout. So AAL long swing calls paid off very nicely. And if they come back to 1764, if AAL does, it'd be a nice spot to get into more AAL long swings. Again, that 1764. We hold that level on the weekly, right? Things look good for AAL to continue higher. And, to continue to gain altitude, to make a little plane pun. Do we have a plane on here? I know we do. Let's see. Nokia, Amazon, airlines. Okay, workers building Taiwan semis. Arizona plant hit with pay cut. So that's TSM, Taiwan Semiconductor, is building an Arizona plant. Makes sense given rising geopolitical tensions with China right now. So smart move. But I guess they hit the workers with a pay cut. Maybe not a smart move. WHO arm labels aspartame as possible carcinogen, but FDA disagrees. That aspartame is in a lot of like sodas and stuff like that. So just don't drink a lot of soda. Not anything too crazy, too breaking of news here this morning. But that'll really wrap us up and take us out here for this morning. I'm interested to read more about Meta's the launch of their commercial AI model. That seems like something that could be interesting here. It would enable startups and businesses to develop custom software on top of the technology. So, Google has Bard, Microsoft has ChatGPT. Meta does not want to be left out of the fray. So Meta is something to watch as well. We're retracing that 309 bull flag breakout area that paid us yesterday. We swung those overnight, closed them yesterday morning, paid over 150% profit, right? Big bag overnight. Watch Meta retracing that 309 area. We've got them, unleashing news about their AI. If we hold that 309 area on the hourly, I like Meta today here. Again, Meta has treated us to some healthy meals on Friday, right? Friday happy hour has been on Meta more than once over the course of the past couple months. So keep your eyes open, right? Watch that 309 area on Meta. Pay attention to that, because they could get a little run. They could stretch their legs and get their stride on. So I'm going to go ahead and create a little alert there. Meta approaching breakout retracement, or breakout support, either one. But yeah, you want to be alerted at 309, right? Or near 309 as we pull up to it, since this doesn't want to zoom out enough on the 1 minute. Yeah, I put one on the 5 minute just at the pre-market low. letting me know that we're approaching that 309 area. Keep an eye on that for Meta. And then, of course, something that we mentioned last night, keep an eye out for Tesla as well, breaking that hourly downtrend last night. Currently bull flagging here in extended hours. Make sure to look out for Tesla. Tesla 0 dates could come up crazy today. Of course, they are crazy. Crazy volatile, right? And crazy risky. Not going to undersell that. They're crazy risky. They expire by the end of the day, but they also give you the opportunity for insane paydays. So keeping an eye on Meta here this morning at open. Tesla at open again. Watch Tesla's pre-market downtrend. I'll go into more detail on that in the Loom video recording that I'll go make for you guys now. But other than that, everybody, right? GM watching replay, KRE, the regional bank ETF. So I think it does say it says regional banking ETF, but I think that there's a different there is one that is like a China ETF. You're right. I might have gotten the tickers mixed up. Let me see here. There's a China ETF that has a similar name. So yeah. Anyways, if it is KRE, KRE has the potential to break out there, but we all know. Okay, so there are a few. Oh, KWEB. That's what I'm thinking of. KWEB is like a China internet ETF. So that's what I was thinking about. So yeah, China is one, and we don't really have as much time to go into KWEB right now. But yeah, the regional bank ETF, I don't know. We talked about LNC, right? So it could break out, but overall, I've got our eyes looking at watching LNC to see if that ends up being kind of the next big bank to fall. So I'm keeping an eye out on that. We mentioned LNC, so they've got earnings coming up. We'll see if they maybe release some bad news on earnings, something like that. But yeah, I feel like the regional banking ETF, I'd rather go keep making money on SPY, Tesla, and all the rest of them than take a chance on regional banks right now. But everybody have a great rest of your day. Congrats on being here, investing in yourself. That always nets the biggest return. Even though we did have some pretty big returns yesterday as well, and earlier this week on oil. We had oil earlier this week, and all the big techs later on in the week. I mean, can't ask for better market movement or better execution, really. So make sure you just stay ready to execute, but remain patient. Congrats on money that you made, money that you withdrew to pay yourself, and also the money that you will make based off the lessons that you learned this week. The lessons are always the most profitable, right? Actually placing the trades is just going through the motions. So have a great rest of the day, everybody. Have a safe weekend, and I will see you back here on Monday for our next pre-market prep session. Peace.